Good afternoon, ladies and gentlemen, and welcome to the DEKEL AGRI-VISION PLC interim results for the 6 months ended 30th of June 2021 investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. These will be available via your Investor Meet Company dashboard, and we'll notify you by email when these are ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, I'd like to submit the following poll, and I'd now like to hand you over to Lincoln Moore, Executive Director. Good afternoon.
Good afternoon, and thank you for all the participants for joining today to hear about our interim results for DEKEL and touch on how we think things are going to play out for us in the next 6 to 12 months. As I said, my name is Lincoln Moore. I'm an Executive Director of DEKEL Agri-VISION. I'd normally be joined, and typically I join for the half year and the full year results by Shay Cole, our CFO. He's actually just jumped on a flight to Cote d'Ivoire. As those who follow the company closely will know, we're in the process now of commissioning our cashew processing plant, which we'll get into detail later, so he has to excuse himself today. So just in terms of what we will do today, I'll run you through the presentation as succinctly as possible and try to answer as many of the questions and welcome questions onto the side chat as we progress. But for those who are relatively new, we'll just give a very brief overview. DEKEL was a palm oil business, now is an agri-processing business based all in Cote d'Ivoire. Our strategy is, I think, quite simple. We work together with thousands of small farmers in collaboration and try to assist them in terms of logistics and processing of agriculture products. Of course, for 7 years now, we've been operating one of West Africa's largest palm oil mills, and we're obviously quite excited to be at the penultimate stage and be finally in commissioning of our cashew processing plant, our second production asset. We also have 2 other projects which are in feasibility mode, one being a third commodity and the fourth being our aspirations in clean energy. Of course, makes sense for us with the agriculture waste product that could be turned into energy, and we're looking to do this together with solar. For today, there's obviously, I think, enough to talk about within the palm oil operation and the pending cashew business, so we'll focus solely on those 2 businesses. Just firstly, in terms of orientation for those also who are relatively new, you can see in the bottom right-hand side is the location of existing palm oil business. This is the ANY site. It's about 1 hour drive from Abidjan and Abidjan port. In fact, we rarely use that port for this business. Almost our entire product, the crude palm oil, the palm kernel oil, and the kernel K is sold ex-factory, which is a huge advantage for us in terms of being able to market our material locally. And further to the north in Tier-Pursu is the location of our cashew processing plant. We'll show you some pictures later. The road to Pursu is excellent. The capital, or the political capital, Yamoussoukro, just to the south, is a very good road from Abidjan to Yamoussoukro because of Yamoussoukro's importance. So it's a 3.5 hour drive. The cashew business will be an export business, so we'll be using road transportation to port and then shipping our finished product, cashews, in shipping containers. In terms of where we see ourselves continuing to, in time, diversify agri-wise in Cote d'Ivoire. It's by far the most significant agri-country in West Africa. And as a result of that, the logistics, the human capital and infrastructure are all excellent in terms of agriculture. It's number 1 in the world in cocoa. It's 2 or 3 in cashews. Significant in West Africa from a palm and rubber coffee point of view. So there's a lot of other opportunities for us within Cote d'Ivoire. So just now focusing in more on our palm oil operation and results for the 6 months ending June 2021. These are the production numbers that have been in the market for some time, so I won't spend too much time on this slide, really, other than to note that the key drivers of the successful half year really stem to the increase in quantity of the fresh fruit bunches that we were collected this year versus last year, 16% up. And we'll touch on in a bit of detail later, but very strong palm oil prices, 35% up on the same time last year, which have been the major drivers of the results themselves. Just turning our attention to those results, I've tried to helpfully set them out in each year so you can sort of see how we've progressed. H1 2021 was a record for us in terms of revenue. Again, the main driver being pricing. It was a record in terms of EBITDA and a close to record in terms of net profit after tax. I think when I look at the results, I always look at areas that I think, where could we improve even further. Of course, this year we had a much better gross margin percentage at 22.6%. Which is mainly driven by the better pricing, but still, that line is still lower than where we have been in the past in 16 and 17. I think there's a couple of things there. One, the extraction rate was down this year, and that is largely out of our control in terms of oil content in the fruit, but we are doing a maintenance program at the moment in terms of the empty fruit bunch press and in terms of the oil separation process. And we think the extraction rate, which was less than 22% for the first half, can potentially move back to traditional levels, which is actually quite a material number. A 1 percentage point increase in our extraction rate over a year can add at least €1 million of direct EBITDA. On top of that, it's important to note this is the first 6-month period where we carry the operating costs of the cashew business, which is not yet operational. So there's approximately €200,000 within the EBITDA there. That is an addition to last year as well. And it's important to note that stock on hand was reasonably considerable at the end of 30 June. We were holding just over 1,900 tonnes of crude palm oil, which has been sold through Q3. So it's more of a timing issue, and those results will be reflected in the full year results. And as we stand now, our stock levels are virtually back down to zero. In terms of the results, obviously the profitable period has assisted our balance sheet. So you will recall we did an equity raise to assist us as we moved into cashew production at the start of the year, and also entered into a bond facility which we drew down approximately €5 million towards the start of the year. And this has materially improved both the short-term working capital position of the business and the net asset position of the business. We think, and we'll touch on why we think the results can improve next year as well, that natural organic growth and profitability can further improve our balance sheet next year, and that will be the main driver of the further strengthening our balance sheet. But as it stands now, this is probably the strongest position we have been, but we seek to further improve the balance sheet position of the company. So palm oil prices, no doubt, particularly in the last few weeks, everyone has been drawn to news on the various commodity prices, gas, coal, and others, which have been heavily publicised. But across the board in commodities and in food, which is perhaps not as well known on AIM, prices have been increasing for some time. We share some of the same reasons as things like gas and coal, in terms of there has, of course, due to COVID, been supply restrictions and now logistics challenges. But the fundamental reasons of the palm oil price increasing go much deeper. Before COVID, there were already very strong or very low stock levels of palm oil, and the price was already on the way up before COVID hit. If we go back to April 2020, the price shortly dipped last year for technical reasons like oil did and like others did. But then you can see on this graph that the palm oil price has steadily gained. And as I looked this morning, it was sitting at $1,285 a tonne. Now, just looking at what we did in the first half, we averaged, let's move it back into US dollars, around $1,000 a tonne. And at the moment, we're doing around $1,150 a tonne. So there's scope for prices to stay at this level for our high season, which is only a few months away, to even be better than it was this year. So supply-wise, palm oil remains incredibly tight. You've got the overlay of the COVID structural reopening issues impacting it as well. And then demand side, of course, as markets reopen, people are looking to restock. And one of the interesting stories that I follow is how much stock countries will want to hold on hand as we move perhaps into a period where countries want to protect and have more stock on hand than they previously did on a scale where they knew they could source as and when they were required. What do we think in the next 6 months? I think the prevailing view is that we're going to see very strong palm oil prices over the next period. Perhaps from my point of view, maybe there could be some additional supply out of Indonesia potentially if they reduce their levies and taxes. But on the flip side, then you've got countries like India, which traditionally ran quite big tariffs on palm oil, and it's unlikely to see those stay at those levels or increasing in a time when prices are at a raw level are so high. So for us, anything over $1,000 a tonne is excellent, and at these prices, $1,200 plus, we're talking about a very super potential high season coming up early next year. Of course, as I pretty much focus on what is going to happen in 6 months, but our view remains bullish on palm oil. The major producing countries, Malaysia and Indonesia, have had substantial reductions in planting over a very long period of time now. And you need to bear in mind that they still produce over 80% of crude palm oil, and crude palm oil is over 40% of all vegetable oil. So it is quite significant, and it's really difficult to see where that supply side is going to be picked up. In my view, in terms of the demand side, palm oil is an essential product. It's in over 50% of products on the supermarket shelves. So GDP type world growth of 3 to 5% on a situation where supply is constrained leads us to a view that there could be a very bullish period of palm oil prices over a number of years to come. So, of course, the palm oil business, and we'll touch on it again at the end, it's been fantastic for 6 months, and I think we're potentially in a position for an even better first half next year in the high season. And coming together with that is our cashew processing plant. I can say it's been a slog over the last 12 months. I think from a COVID perspective, Cote d'Ivoire has had a lot less impact locally than perhaps other countries in Europe, but we haven't been immune to challenges in sourcing raw materials and logistics. Pleased to say now we're in a situation where the mill has now started the commissioning phase. We have 2,000 tonnes of raw cashew in our warehouse awaiting production, and we believe that we'll be in a position to have first production within 50 days. So what I think we can see is a number of key milestone announcements over the next 1 to 2 months in terms of the cashew business. The absolute key for us over the next 2.5 months 3 months of the year is to ensure this mill is operating as effectively as possible to allow us to scale up to close to full production as we can next year. So commissioning is 30 to 45 days. It's certainly very achievable, and the cashew season in terms of buying the raw cashew starts in February. So we have a really critical 3 or 4 months ahead of us First of all, to prove the concept, the existing commissioning process and first production and a number of the key KPIs, and then move into the initial full-scale production. But what we believe in time is that this business, and we'll touch on a little bit the reasons why on next page, can be a larger EBITDA contributor or larger margin business than our palm oil business. So it's got a heavy focus from the management point of view. And just a reminder why we chose cashews as our second project. There, as I said, towards the start, Côte d'Ivoire is number 2 or 3 in the world in terms of raw cashew production, and there's a significant shortfall in local processing. So whereas the palm oil business, we've stagnated around 40,000 tonnes of production, and the capacity is 60,000. There's a strong view that we can move the cashew business towards its full production much more quickly, and the margins that we're seeing, and we're getting some vision of that, of course, already in terms of we can see what we're paying for the raw materials and potential selling prices, potentially we think higher than the palm oil business. So we hope to prove those concepts out over the next 60 days to 90 days. These pictures are a little bit old, probably 2 weeks old, but you can see the top left-hand side, the size of the 2 buildings. One is deals with inventory and sorting, and the other building deals with processing all through to final product for road transportation for shipment, and pictures of some of the equipment inside. You can see probably in the bottom left, you see there's a lot of room inside the warehouse. That's because all the infrastructure has been built to effectively in time process 30,000 tonnes of raw material, and we'll be starting with 10,000 tonnes. So it's simply a case of adding another line, but all the infrastructure is in place to move to that full scale capacity. So some basic economics. We're sitting on at the moment 2,000 tonnes of raw cashews. Assuming we processed all that before the end of the year, we're talking roughly about 460 tonnes of cashews. And there's the determination of the breakdown between the whole and the broken and whole. We're hoping the whole will be north of 80%, but we're conservatively estimating 60 to 70%. We're talking, a small initial contribution this year in terms of actually when the sales all take place. Some of the sales may take place into January, but that body of product on hand is around about €2.5 billion, and it's of course it's next year where we should see the full benefits of the first size of the plant. The 10,000 tonnes of raw cashews can generate revenue at the current prices around about €13 million, and we think that the EBITDA contribution could be somewhere between 3 to 4 million. People may have tried to look up cashew prices. We stated that them here in US dollars in kilos. It's a high value product, of course. When you think about it per tonne, we're talking about $7,000 to $7,500 per tonne. What we're seeing in the last 60 days is prices start to creep up. Not particularly surprising given most staple essential food products have already increased. Cashews is more, as I said, a high value product and seen or viewed as a more medium to luxury product. So the price increases has started to take a little longer, but we're seeing quite robust pricing at the moment. And I think in terms of agri in general, it's being in the space of cashews as well as an essential product like palm oil is going to give us great diversification next year, as well as increased scale. Social and environmental side, absolute priority for us at the moment. The social side, I do touch a lot on presentations that our business has it already inbuilt in terms of the relationships we have. We have over 3,000 small farmers at the palm oil operation, and it'll be a similar number of small farmers that we work with at the cashew project. So working together with them, providing them a guaranteed place where they can sell their product. The assistance we provide in terms of our nursery setups, our fertilizer setups, our discounting programs, our health insurance programs, put us in really strong stead from a social capacity, and we work together really strongly with DEKEL, who is UK financing partner, who have also heavily focused on the ESG factors. For us now, the critical focus is RSPO certification. We had the pre-audit done by Proforest at the back end of Q1 into Q2, and now working through the audit points, which a lot of them are administrative in nature. We have calls over the next 1 to 2 weeks with the auditor to try and go through where we think we are in terms of readiness, which we believe we are ready for them to come out and do the certification. And I think probably the most obvious key announcement will be once we've booked the certifier, which we're trying to do as soon as possible. So a huge priority for the company. It's something we've been working out for some time. It hasn't been easy with moving consultants around over the last 12 months, but we are very close to the finishing line, and the certification, I think, will be a strong endorsement for our ESG, along with the investment of course, our DEKEL and the business in general's the ability of the business to assist small farmers. So where do we think we are, and where can things look over the next 6 to 12 months? I think the high season, which is starting in mid-January, at this stage where palm oil prices are, we could be better off by potentially another €100 a tonne. So it could be, again, that could drive an improvement on the palm oil business. We think there's scope for improvement in the extraction rate. So those two points together, I think, can drive a further period of growth of the palm oil business. The quantity side was reasonably strong this year. There's a possibility it could be stronger, but much more difficult to predict in terms of the raw material availability. But overall, this business has the potential in the first half of next year. There's no reason why it can't push to EBITDA from around the 4 million mark to close to 5 million for that business standalone. Cashew, of course, is one of the key milestones of the company since its listing on AIM. It will drive a material step up in the revenue and profitability, we believe, almost immediately from next year. And in 2 to 3 years' time, as we move it towards capacity, we think it could be a stronger contributor than the palm oil operation. And of course, we have other projects that I mentioned earlier that we are working through the process to be ready to green light and move into any form of construction phase. So it's one of the strongest probably positions we have been. I think we're likely to report record revenue and potential record EBITDA for 2021. And as I said, in terms of the supportive price of palm oil and the cashew business coming on board, there's a strong view that we can step up materially again in 2022. That concludes my comments for the moment. So I'm more than happy to take questions.
Lincoln, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the top right-hand corner of your screen. But just while the company take a few moments to review those investor questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation has ended, you'll be redirected for the opportunity to provide your feedback in order that the company can better understand your views and expectations. Lincoln, investors have submitted a number of questions before the event and during the presentation today, and I wondered if I could hand back to you to respond to those where it's appropriate to do so. Could I just simply ask you to read out the question and then say who it is from?
Okay, I'll try and do this in some logical order by starting with some of the operational style questions and then move into the financial questions, and then share price and valuation and investor relations. So the first question is a really good one. CPO prior production flatlined at 37,000, same as the 2016-17. What are we doing to increase the volume, or is it likely to continue at this rate? I think forgetting first of all, putting aside what we do, it's important to understand the market size. So when we entered the market in 2013, it had been a period of virtually nil new planting prior to that. And all the new planting has taken place from 2012, 13, 14 onwards. Takes 4 or 5 years to first yield, 8, 9 years to get to any sort of close to mature yield. Planting rates have been significant in our region. We know this because we're one of the major suppliers of the plants from our nursery, where on average we're selling 3,000 to 4,000 tons. Sorry, 3,000 to 4,000 hectares equivalent. So there is going to be organic growth around us, and that will be clearly the major driver in terms of moving from this line of around 37,000 to, obviously the next goal would be 40 to 45,000, which is obviously we're hoping in the next 12 months we can deliver. And secondly, on top of that is maintaining, improving our market share. So when we built the mill, we built it with a double reception and automatic tipping system, so trucks can come in and out of our mill, particularly in the high season when there's significant traffic, far quicker than alternate mills. We have now 7 logistics centres, so we're making it as easy as possible for farmers to drop their product at our locations, where we compete with other mills in the region on price, are known as a good payer. We sell discounted plants from the nursery. We recently added in a health insurance scheme for our small farmers to incentivize them to sell to us, which also extends to their families. So there are a number of things that we're doing. That there hasn't been a lot in terms of mill sizes, a mill like us coming to the market, but there has been some smaller antiquated type mills established, which don't conform to any environmental standards, that don't pay for any of the typical cooperative fees and levy fees. I don't touch on this a lot, but that has taken some of the reduction. We work with the local authorities and other players in a sensitive way to ensure that all players are following proper ESG rules. So to summarise, the main thing is the sheer amount of planting over the last 5 years coming through. And to give you any confidence at all, we've seen it happen in other areas. Rubber is an example where people forgot there was a huge planting regime 10, 12 years ago, and that's coming on board as an example. And we hope it's the same with the palm oil. So hopefully that covers that question. Next one was, do we forward sell? No, we don't forward sell a product. The way it works is the price for the start of every month in terms of the fruit and the price we sell at is essentially fixed. There are some market damages, but it's essentially fixed. So we have almost a hedged in set margin at the beginning of the month. So we haven't used hedging tools. We look at it from time to time. We obviously think people invest some in us because they want exposure to the palm oil price. So we're mindful about putting a cap on that. I think one of the things we're trying to do is, it was particularly notable in our PKO this year, that the local prices were materially lower than international prices. So find alternate international sales routes. You've got to bear in mind that once you talk about exporting, you're adding on sometimes 100 to 200 per tonne. So it's often better to sell locally. But at this stage, we don't use any formalised hedging tools, and the ones we looked at, have been quite expensive and could actually take away a significant amount of our gross margin. There's a question on cashews in terms of the tonnage. So obviously the next we'll produce, so the next few months as the commissioning and first production phase, there's enough raw cashews on hand that we can produce around 450 tonnes if we process it all before 31 December, which is a roughly revenue of 2.5 million. But it's really, as I said, I think that the key is to make sure we get everything right and be able to move to close to full capacity next year, where we can produce something in the order of potentially 2,300 tonnes, and it equates to revenue of about 13 million, which is, yes, we think it could be 3 to 4 million of EBITDA, which is another question asking whether that 3 to 4 million EBITDA was on the size of the mill we have at present, or the scaled up mill that's on the size of the mill we have at present. If we move from 10,000 tonnes to 30,000 tonnes, the 30,000 tonne capacity, we can move up to around 40 million euros of revenue and EBITDA potentially. We've modelled it somewhere between 10 to 15 million euros, depending on what sort of assumptions you make on whole and broken and pricing, etc. So when asked about the price of, can you comment on how the price of cashews is recovering from the fall last year? Yes, I touched on that earlier. We have seen the price of cashews start to rise. It's risen about 25% in the last 3 months. So at this stage, we've only been purchasing raw materials. So potentially it's in our favour that we've been purchasing the raw materials at possibly lower prices, and then as the end product price has increased over the last few months, there's a potential that will be, the margins could be it could be helpful for margins. But the price, the state guarantee issues is not, it's a commercial market in Côte d'Ivoire. So I think you'll see in places like Tanzania and others where there's a lot more government interference. But at the moment, as it stands, the price is roughly about $7,500 to $7,500 per tonne for the sales price. Next one is the timing of the third commodity. Is it likely to require similar levels of investment as the cashew project? So we did a full internal feasibility about what our third commodity should be. There were kind of two that we thought were logical, and now in detailed feasibility, and there is a leaning towards one in particular, and we'll get the detailed feasibility internally back in the next few weeks. In terms of timing, first of all, there's so much focus at the moment on, one, ensuring that we take advantage of this period of great palm oil prices and through the high season upcoming, and doing everything we can from a maintenance perspective that we can capitalise, and two, with the cashew coming into first production and ramping up next year, we are conserving funds. So I wouldn't expect any investment in a third commodity until, or even really putting out the timing until we've stabilised the cashew business. But in terms of what it would look like from a capex point of view, it's, if cashews was 10 to 11 million US, this one is more half. So it is something that we have within our capabilities, potentially from continued cash flow development from the palm business and potentially the cashew, together with the bond facility, which we've this stage drawn down 5 of 15, which I think dovetails well into one of the next questions is as we're developing into a cash flow business next year, or this year and next year, what is the plan for us? We still think our debt levels are higher than we would like them to be. So the first priority would be to bring debt levels down a bit from the current levels before any dividends. And I think that as I said, we've got other things to invest in. So I think there's the capability and best value for shareholders is through capital gain at the minute, rather than moving back to a dividend model at this stage. So debt pay down, reinvestment in third commodity, and then perhaps and potentially a scale up of the cash use, and then perhaps we can look at moving to a dividend, which is something which we would like to do, but we think at the moment there's a growth trajectory we should take and diversification that we should take before moving to that model. So I just ask a quick clarification: is it the Palmer Mill 60,000 tonnes or 70,000 tonnes? I would consider it as 60,000 tonnes, and I think where we can see it getting to is 50 to 55,000 tonnes is doable. Now, what we need to get there is mainly going to be in the high season. So when we're producing, let's say, something like 26 to 28,000 tonnes in the high season or the first half of the year, that number needs to move up towards 35 to 40, and then 15,000 in the back end. So I would work off 60,000 as an absolute maximum, and the business stabilising somewhere between 50 to 60,000 tonnes would be an excellent business model for us. What is the labour market? It's more continued questions coming through. What is the labour market like in Côte d'Ivoire? It is from a perspective of availability, it is good. It is not suffering from the unemployment rates of some countries, which are north of 80%, but it would be roughly 60%. There's a high amount of skilled local labour. Our entire operations team is local, and our entire labour force for the pulp business, which is roughly 300, is local, split almost 50-50 men and women, and availability of labour and stability of our labour team is very good. Just moving on to share price and you know what it's basically how it's worked this year. We moved, I think this time last year, I think we're about 3p. Then we moved as we moved into the high season, with palm prices increasing. I think by the end of January, we even moved above 6p. We raised at 5p around that time, and it's correct to say that we've stagnated around the 4.8 to 5p over the past 6 months, despite almost every announcement in terms of the palm oil business being positive nature, and arguably the main negative being slight deferral in the cashew processing plant, which we're aiming for in July, which is obviously I mentioned 40 days from today. So there's been some deferral there. We in terms of hard valuations, we think that the business is, on the palm oil business standalone, potentially undervalued, and we feel that there is almost zero value attributed to the cashew business, which, if you look at Arden's research, actually has a valuation potential higher than the palm oil business. So from a fundamental standpoint, there's no reason why a 25 million pound market cap that where we can move the enterprise value with these two business, market cap 75 million to 80 million, and enterprise value to around the 100 mark is where we think. Of course, I invested AIM, and one of the reasons I invested in AIM is far from perfect. We have been, I think, slightly overlooked over the last 6 months as people have focused on renewables. Anything to do with battery technology has been where a lot of the hype has been, but I'm seeing more and more news on the food side. There are not many ways to play food on AIM. I think DEKEL is one way to play it from a particularly small cap point of view. From an investor relations point of view, you could always do more. We do these two conference calls. We do the monthly production. We do regular interviews with directors, talk. I think the next major bit of investor relations that we would like to do is in the lead up once we have first production on cashews, and I'll probably do that for a series of interviews with Crux, which is one that seems to be getting a lot of following, but do it in a four interview format so they can follow the cashew business coming to operation. But I think just generally, if the palm prices stay where they are and we move into the high season at this level, and we have the cashew on board, they're going to be the big drivers. And if you look back, even in the poorer performing years, the stock price always gains momentum at the end of the low season, which is in a couple of months' time, and then through the first quarter of the high season. So I think cyclically, we're in a spot where I think the share price can move up as well. I've tried to answer they've kept coming through, but I've tried to answer.
Lincoln, thank you. You've been very generous with your time there, and I think you actually managed to address pretty much all the questions from investors today. And of course, the company will review any further questions submitted and publish responses where appropriate to do so. Lincoln, just before redirecting investors for feedback, I wondered if I could ask you for a few closing comments.
Yes, I think where we stand right now, it's clearly been a record half year. The size of the palm price is going to be, or it is currently higher, materially higher than what we got in that half year. We're 4 months away from the high season starting again, and at these levels, that core business or the initial business can be more profitable. We've obviously got the cashew business coming on and going into full production, which it will also be a material contributor, but in time, I think larger than the palm oil business. So there's a step up in profitability of the core business, and then there's the introduction of the cashew business with, of course, a pipeline of projects to come. So it's and I say use the word arguably a little bit, probably too much, but I think it's a really period of the next 6 to 12 months where DEKEL could break through this business of being 25 to 30 million revenue through a business that moves up to 40 to 45 million with a much more material profit line, given the fixed overhead won't change a lot. So an exciting and challenging period for us over the next 6 to 9 months.
Lincoln, thanks again for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, however, is greatly valued by the company. On behalf of the management team of DEKEL AGRI-VISION PLC, we'd like to thank you for attending today's presentation. That now concludes today's session, and good afternoon to you all.
Thank you very much.